Um, Partnership form for a year 31st March 23. Following particulars are now made available to you respect of the trading business for which books of accounts are maintained. Secret commission of 50,000 paid to government official bribe. 12 lakhs paid as commission to partners son 0.% of the sale value collected but section without deduction tax at source. TD is not deducted and partner has 25% share in the firm and loss in the above business after considering the above item debited the books of profit and loss account. The business loss is 80 lakhs and unabsorbed depreciation is 19 lakhs. In addition to it, the firm has a warehouse business covered by Section 35 AD, suffered loss of 55 lakhs. The firm has filed a return of income and assessment year 2024 on 29/11/24 after the due date, specifying the follow for specific item which is eligible for carry forward of subsequent years. Which are right? Will your answer be different if the firm has filed the return on 29/12/24? So the partnership firm's turnover is 1 crore, hence liable to tax audit. Tax audit due date is 39/24. Due date of 13/24. In the case, firm has filed a return of loss. So section 139(3) after the due date 29/11, hence is not eligible to carry forward the loss 75 lakhs. 75 lakhs, what is 75 lakh? 50, 17 5 lakhs 90,000. Section 71, so working out, and loss of 55 lakhs in specific business refer to section. So we will see what is that 75 lakhs. Since section 80 read with the section 139(3), the return of filing income on or before the due date is necessary for carrying forward such losses. Okay. Hence, there is no such restriction to carry forward the unobserved depreciation under section 32(3). Therefore, to carry forward the unobserved depreciation in 19 lakhs for the assessment day 25/26. Very good. The answer will be so depreciation carry forward. There is no problem. There is no problem in carry forward depreciation. Depreciation carry forward, no problem. Very good. Answer will be the remain the same even if the firm has filed the return beyond 29/12 because the due date is 30 September. Tax audit due date they have filed lately. Since both 29/11/24 and 29/12/24 fall beyond 29/12/24 fall beyond the due date of filing the return of income of the said firm. Working notes, computation of business law to be carried forward, loss as per the profit and loss 80 lakhs. Secret commission add back. Hmm. Then 30% commission is paid to the sons without deduction. That is also to be added. 30% of the commission without, because paying commission to son is not a issue, but not deducting TDS is a issue. As for section 40A, 1A, it will be deducted 30%. So the amount of 15 lakhs, 30, how much amount of a commission they pay here? Commission of 12 lakhs is being paid now, 12 lakhs left, 30 percentage. 3 lakh 60,000. So both add back 17 lakh 90,000. This is the proper carry forward loss. In that carry forward loss, 12 lakh 30,000 is not eligible. Only the depreciation 19 lakhs and 55 lakhs of warehouse specified business. It's eligible. Only the depreciation can be carry forward. So in this case, a firm is filed the loss return after the due date, hence it is not eligible to carry forward the business loss, not the business loss, not carry forward, not eligible under section 72(1). And the loss of 55 lakhs is not eligible for the specified business under section 35 AD of section 73A. Hence, section 80A read with the section 139(3), the return filing of return on or before the due date. So both the losses, what are the losses? 79 lakhs 79 lakhs after reducing 30% of this is secret commission 50,000 and the 55 lakhs which is not eligible to carry forward the such kind of loss because it has not been filed before the due date. This is the working. Thank you.